It is a Saturday morning, the kind of morning that feels different depending on who you are. For most people, Saturday is the exhale after 5 days of someone else owning your time. But for one specific kind of person, Saturday morning looks like this: a cup of coffee, a spreadsheet, a list of properties, each one a decision that compounded into the next. And somewhere on that list is unit number 1000. The first one took everything. The 1000th one arrived quietly, almost without ceremony. And the distance between those two moments is not just money. It is a completely different human being. This is every stage of a real estate mogul, from 0 to 1,000 units. Stage 1, the nothing. You have no property, no portfolio, no down payment saved. You are renting somewhere, probably paying someone else's mortgage without realizing it yet. You make somewhere between $35,000 and $60,000 a year. After rent, after groceries, after the car payment, after the subscriptions you forgot to cancel, there is maybe $200 left at the end of the month. Real estate feels like something for other people. People with money, people with connections, people whose parents already owned something. You scroll past listings the way you scroll past private jet content. It is entertainment, not information, because the gap between where you are and where you would need to be feels too wide to take seriously. Here is what nobody tells you at this stage. Every single person who owns 1,000 units started here, at 0, at renting, at $200 left at the end of the month. The difference was not that they had more. The difference was that one day they stopped treating real estate as entertainment and started treating it as education. They read something. They watched something. They drove past a neighborhood and started asking different questions. The shift is not financial at first. It is perceptual. You stop seeing buildings as buildings. You start seeing them as income statements. And once you see it that way, you cannot unsee it. Stage 2, the first deal. This took longer than you expected. You saved for 2 years. You cut things you did not want to cut. You had conversations with your bank that made you feel small. You looked at 37 properties. You made offers on 4. 3 fell through. 1 did not. A single-family home. Maybe a small duplex. Purchase price somewhere between $150,000 and $300,000. You put down 20%. You borrowed the rest. The mortgage payment is $1,200 a month. The rent you collect is $1,600. $400 a month in cash flow before repairs, before vacancy, before the water heater that will fail in 11 months. You feel proud. You also feel terrified. The strange part is this: the property does not care how you feel. It sits there. The tenant pays. The mortgage gets paid down. The neighborhood slowly appreciates. And every single month, quietly, without asking your permission, you are building equity in something real, something physical, something that exists in the world independent of your anxiety about it. This is the most important deal you will ever make. Not because of the money, but because it proves to you that it is possible. And that proof is worth more than the cash flow. Stage 3, the small portfolio. 3 units, maybe 5. Maybe 8. You are still working your job. You are still an employee by day. But now you have a second identity that nobody at the office fully knows about. You are a landlord, a small one, an accidental one almost. But the rent checks arrive every month and something in your brain has permanently rewired. Your annual rental income is somewhere between $20,000 and $50,000. It does not replace your salary yet, but it is real enough that you start doing different math. You stop thinking about your next raise. You start thinking about your next acquisition. You stop asking, how much does this job pay? You start asking, how much equity am I building? Here is the hidden truth at this stage. Most people who get to 5 units stop here, not because they cannot go further, but because 5 units feels like enough. The extra income is comfortable. The stress of managing tenants is real. And the jump from 5 units to 20 units requires a systems upgrade, not just a capital upgrade, that most people are not willing to make. The people who keep going are not necessarily smarter. They are simply more dissatisfied with comfortable. They look at 5 units and feel not satisfaction, but momentum. They want to know what 10 feels like, and then 20. And then the question stops being about the number and starts being about the machine. Stage 4, the operator, 20 to 50 units. You have crossed a line that changes the nature of the business. At 3 units, you are an investor. At 30 units, you are an operator. And those are 2 completely different jobs that happen to involve the same asset class. Your gross rental income is somewhere between $200,000 and $500,000 per year. The number sounds large. Your net, after mortgages, after management, after maintenance, after insurance, after vacancy, after the lawsuit that came out of nowhere last spring, is smaller than people assume. But it is real, and it is growing. And it is yours in a way that a salary never fully is. You have a property manager now, maybe 2. You have a maintenance crew you call. You have a lawyer you have on retainer. You have an accountant who has introduced you to depreciation in a way that has fundamentally changed how you think about taxes. You are paying almost nothing in taxes on income that would have put you in the highest bracket as an employee. And nobody at your old job knows this is possible. This is where it changes, not just financially, structurally. You are no longer trading time for money. You are building a system that generates money while you sleep, while you travel, while you are sitting in a coffee shop on a Saturday morning running numbers on the next acquisition. The stress is different now, not less, different. It is the stress of ownership, of decisions, of responsibility for people who live in your buildings. It is a heavier weight than employee stress, but it is a weight you chose, and that makes all the difference. Stage 5, the scaling. 100 units, the number that separates the hobbyist from the professional. Your portfolio is now valued somewhere between $8 and $20 million, depending on the market. Your annual rental income is somewhere between $1 and $3 million. Your net worth has crossed a threshold that your parents would not believe if you showed them the balance sheet. You are raising capital now, other people's money. You understand how to structure a deal so that investors get their return and you keep the equity and the management fees and the appreciation. You understand syndications. You understand preferred returns. You understand waterfall structures in a way that would have been a foreign language to you at stage 1. Nobody says this out loud at this stage, but the game has changed again. You are no longer just a real estate investor. You are a fund manager without the formal title. You are responsible not just for your own money, but for the money of people who trusted you. And that responsibility is something you feel differently than anything that came before it. Your personal lifestyle has upgraded quietly. You moved. You drive something better. You travel when you decide to travel, not when your vacation days allow it. But you are careful about how visible this is. You have learned that visibility at this level attracts the wrong attention. The people who flash wealth at 100 units are usually the people who lose it all by 200. Stage 6, the institution. 250 units, maybe 350. You are no longer a person who owns property. You are, functionally, a small institution. You have staff, a real office, a brand. Deals come to you now instead of you hunting for them. Brokers call you. Sellers call you. Other investors want to co-invest with you. Your name means something in your market that took 10 years to build and would take one bad decision to damage. Your portfolio is worth somewhere between $25 and $75 million. The number is abstract enough that you have stopped thinking about it as money and started thinking about it as infrastructure. It is not what you have. It is what you have built. And what you have built has a life independent of you now. Here is what nobody tells you about this level. The money is no longer the interesting part. The interesting part is the complexity, the decisions, the markets, the cycles. You understand real estate cycles the way a sailor understands weather. You have been through enough downturns to know which assets survive and which ones collapse. You buy differently in different economic climates. You are playing a long game that most people cannot see from where they are standing. Your relationships have changed completely. The people you spend time with are other operators at your level or above. Not because you are elitist, but because those are the only conversations that match the speed at which your mind is now running. Stage 7, the Mogul, 1,000 units. The number that seemed impossible at stage 1. The number that felt aspirational at stage 3. The number that felt close at stage 6. And now it is simply Tuesday. Your portfolio is worth somewhere between $80 and $200 million. The cash flow from the portfolio funds everything. Your lifestyle, your family, your investments in other asset classes, your charitable giving, your time. All of it funded by buildings that were once just numbers on a spreadsheet that nobody believed in except you. You wake up in the morning and the properties are working. The rents are being collected. The mortgages are being paid down. The values are appreciating. And you have not thought about your salary in years because you have not had one in years. But here is the truth that nobody at this level will say out loud. The 1,000 units is not the point. It never was. The point was the person you had to become to get there. The discipline to save the first down payment. The courage to make the first offer. The resilience to survive the first eviction, the first lawsuit, the first market downturn that cut your portfolio value by 30%. The systems thinking to scale past 20 units. The capital raising skills to reach 100. The institutional mindset to build past 250. The buildings are just the evidence. The real asset is the operator inside them. It is still Saturday morning. The coffee is still warm. The spreadsheet is still open. And somewhere right now, someone is looking at their bank account and thinking that real estate is for other people. They are wrong. They just do not know it yet. Unit 1 came from nothing. Unit 1,000 came from Unit 1. The only thing standing between those two numbers is time, discipline, and the willingness to begin.